So it's currently 18 of 2 of February 2024. It's Sunday. And yeah, I should have done this yesterday, but I procrastinated on the work. So I'll be doing now. Better to do later than never, but best is to do when it should have been done. So I should have been done this. And it's funny because no one watches my recaps, and even with that, I'm being this is disciplined to post those, even though that no one watches. And that's okay for me. It's just a way for me to make myself enjoy recording and just talking in English to better my English. And just do my weekly recap for this past week, which was the week 2 of February. So my bio was going to the charts now because it's also important. And this was the week 2. My bias was equal lows made on GU, GU and EU at December lows, which are these ones. The XY already traded into the December high with a big wick. Also, this one. Price below. So we are when I'm doing the when I'm doing the this weekly for this is a weekly forecast, but I have a notepad right here on by my side where I do the weekly forecast. On the weekly forecast, I didn't see this week that I just added. Just like here, to, when I made this forecast, the only information that I had was this week, this trading week candlestick, followed then by the equal lows, and I was looking at charts like this, not like with this already week 2 range made, but just simply week 1, which was 5 to 9, 5 to 9, and then the week that we had the previous week, which was week 2 from Saturday from Monday to Friday. So I was seeing the XY and EU just like that, starting here and not this candlestick that we saw now because the week has now passed and it's now behind us. Also mention the price below the monthly open on the EU and GU, above the monthly open on the XY, above December high and above December high. We have the week 1 range, so I'm interested in using this range idea both on EU and GU. GU with a different approach for this week, creating this SMT, whereas EU at the purge. So that's a really important time, not time, but that's a really important factor in calling if a low is going to happen. Because I already mentioned that on ES, the eye of the I already mentioned on ES that this eye, not this one, yes, this Y, was called because of an SMT, and in EU USD we can see that we had an SMT as well with GU, where GU created a failure swing and EU created a turtle soup. So this can be, my idea is that this is the February low and the 3 month low. So the quarter one, the Q1 from here to here. Not the Q1 low because it can be different, but looking from the Q1 open to Q1 close, we are now going to the middle point. So we are now closing the Q1. So price can now open, retrace higher, and then continue lower. Or can now use this as a range low, range high, or now reversal. But the idea is that now this half. Q1. So these first 6 weeks, so week 1, week 2, week 3, week 4, week 5, week 6, week 7, because we had a we had a what it's called a bridge week. Price is now going to open. So this next candlestick for tomorrow, basically, because it's already Sunday, it's going to be the opening also of the second half of the first quarter of the year. So that's a very important thing to note. So with that, we had this low of the first quarter and I believe the low of the month on February made. And our price is going. I believe that our price is going to continue and trade on the upside into these highs, which are very close to each other, going back into a premium of this Q1, of this first half of the Q1, going into these highs. That's my idea, into a premium. That's my idea for the next week that's going to trade. But now I want to focus on this week because that's the idea. It's focus on what happened and not what is going to happen, because the past tells the future. Mm. Okay, the XY I can see and a clear accumulation present and present right now, creating small candlesticks on the daily low time frame range. So on the XY I mentioned that price created an accumulation, expansion, another accumulation, going into this big fair value gap. Now my idea, I have a line right here, but price didn't catch to this line. Even though that I didn't catch to this line, my experience in the marketplaces tell me that this is a 6 month premium week, and this tells me that price doesn't. My experience with weeks is that the consequently crosswind slash half point sometimes doesn't get perfectly tapped into. But if I zoom, we can see that's pretty damn close to half. So this is half, and this is almost like how many pips are this? Those are 17 pips away from it. So that's a good idea, and I believe that price is not going to go perfectly into this point, but it's going to react away from it. So I can see a market maker sell model forming right now with this accumulation, reversal accumulation. Price maybe can reach here and go into these highs, but I would favor seeing right now some sort of reversal if that happens. If that doesn't happen, then I'll be looking for this PDRA to hold price on the upside and then trade lower. But because my idea is that Q2 on EU, Q1, the second half of Q1 is going out to trade higher. That means that on the XY, I would not believe the price is going to trade lower into these lows and possibly create a fake market cycle shift to guys for people to sell that a little bit higher, and that will tell me once price reaches into this key level, it's going to tell me if it's going to be a reversal, so price is going to trade here, then continue on the upside, or if it's going to be a reversal right here, and now price is going to mark a structure shift, retrace, and then expand on the downside. Right now, from this Q1, the low was made on the start of Q1, which is interesting, and price has been already trading higher and higher. So I don't believe that Q1 is going to make a new low, but I believe that on week 2, on Q2, on the second half of Q1, price is probably going to trade higher, right into this, and then trade lower to close as a like ranging candlestick. So once price goes to here, I'll be now possibly more one-sided into buying again, so then the XY can go lower. So the news for today was we had Tuesday 8:30 CPI as well. We had Thursday 8:30 red news, normal red news, and then we had Friday 8:30 and 10 a.m. red news. So no Monday and Wednesday news. That was it. Now going to the charts, making this fast, more like 20 minutes or so more, we can see the entire weekly candlestick where price made a monthly high, monthly low. So you can see that we have the week one high burst, reversed, and then the week one purge as well into the high time frame drawn liquidity, where then price reversed once again, creating this pattern, if I may say so, where I can see a lower, a higher low, lower low, and now I believe that price is going to continue on the upside. So for now, my drawn liquidity is that Monday is going to trade on the upside. Now into the daily. Price has also reached my destination from this swing point, and we have on this week inversed this CB. So it's important to mention that these are now my ideas for higher prices. Now going back into the week, what I can see. I can see that we have the month and we now open the 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 new week. So and I'm actually very not late because I didn't make my weekly forecast and nothing like that. So that's it. I'm a little bit behind on that. I'm just going to put the replay bar so I don't get distracted by the price action of today, of this Monday. And with that, what can I see? Like I said, we have this week, this Monday candlestick, creating this range idea where price traded above the previous week high, then it's followed by trading to the Friday low. So Friday high, Friday low, and Friday high is the previous week one high. So I'll be mentioning this was week one. And now we add week two. And inside of this, okay. 1 week, 1 day, sorry. And inside of this week two, I have Monday, high of the day, and Wednesday, low of the day, with Tuesday being the trending candlestick, as Tuesday and Thursday. If you remember correctly, if I just open again my notepad, I noted that Tuesday at 8:30 CPI news, and we had a big bulky candlestick into a drawn liquidity, coupled as a SMT. But as I mentioned, I'm not going to be talking what is my expectation next. I'll be talking what happened. So I'm not going to say, okay, this is the low. I believe that this is the low. Now price is going to trade higher into these highs. Yes, I could say that, but that's not my idea currently. My idea is to see if indeed what happened this week and to study it. And how could I have capitalized on this week? So we had Tuesday 8:30 CPI, and we had Tuesday large range candlestick, right? Large range trending candlestick, followed by Wednesday no news as well, and we made the low. So the low of the high of the day and the low, sorry, the high of the week and the low of the week were made also on days where there was no news. That's an important note. And the trending candlestick were made on Tuesday and Thursday. So the day right after no news, we had um, trending down candlestick with CPI, and then Thursday also at 8:30 news, red news, we had a trending candlestick on the upside, which is then so we had a consolidation, expansion, reversal, expansion, retracement, which is this candlestick that traded into the Wednesday high as an immediately rebalanced, and then price immediately expanded on the plan. But you want for day trading, I want to place myself into this Tuesday and Thursday candlestick, which both had red news at 8:30 USD, which are 8:30 USD news, not EU, but those were USD with 8:30 CPI and 8:30 PMI. No, PMI was Friday. Thursday was car retail sales. Going into the 12 hour. So we can see Monday So this is Monday, first half, Monday, first, second half, sorry, Tuesday, first and second half, Wednesday, first and second half, Thursday, first and second half, and then Friday, first and second half. What can I see on these candlesticks? On the range candlestick, so on Monday, most of the day, or most of the candlestick was made on the first daily half. So in the night cycle, from 5 p.m. to 5 a.m., price made most of the range. That is then followed by the second Tuesday candlestick, which was the trending candlestick with CPI slash 830 news, where the first half of the day, so the night cycle, was a little bit muted, creating these equal lows, and then the second half of the daily candlestick, the morning cycle from 5 a.m. to 5 p.m. was a lot with a lot of speed and distance. This is then followed by Wednesday no news with the reversal, and this is where you want to place yourself. And I believe that it is the reversal of the month, so this is the best place to take yourself to the candlestick, which was this Wednesday after CPI bearishness and big delivery. Everyone wants to short this pattern. So what does most of the market see? Okay, equal lows, an eye, a purge slash breakout here for the retail traders. For ICT traders, it's a market structure shift after all of these market structure shifts, followed by a 5 gap. But one thing that they do not know is that this is not a random low being broken. It's a low purged with an SMT here on the XY with the GU, where GU created a failure swing and the X and EU created turtle soup. So this turtle soup is what you can is when you that's why turtle soup is such an important topic when calling tops or bottoms. You need to see an SMT forming to be confident and so that you can place yourself on to and believe that the reversal is going to happen. There's also coupled with a lot of other not things that I use but things that I'm studying like moon phases. How a month really books from a new moon to another new moon. The new moon on February is from this right here. The is from 11 of Sunday 11, and then it's going to go into the next new moon. So that I'm because month comes from moon in English. So that's one thing that I'm studying as well. Coupled with the Q1's idea. So to call reversals, it takes a lot of high time frame narrative, confluences that need to be not meshed together, but they need to make sense for you to call a bottom or a top. So Wednesday, first half making slash night cycle making the low of the day and low of the week in this case, and then price reverse on the upside, which is followed then by the Thursday trending candlestick with most of it made also on the second half, which were the news. So notice, and this is an important note, when Monday no news, Wednesday no news, Monday high of the week, and Wednesday low of the week, and possibly, and I believe low of the month. That's my belief. Also notice that we have Monday high of the day made on the first half, Monday after the day slash made on first no Monday after the week made on first of the week made on Monday first daily half night cycle Low of the week made on Wednesday. First daily half night cycle as well. Now notice that we have Tuesday trending candlestick, Thursday trending candlestick, Tuesday with 8:30 red news slash CPI, Thursday with 8:30 red news car retail sales, and also Tuesday reversal slash after they made on the second daily half slash morning cycle, Thursday reversal made on first daily half night cycle, but biggest range in the second daily half morning cycle. On Thursday, the only difference is that we made actually the low of the day on the first. We made on the first daily half, so in the night cycle from 5 p.m. to 5 a.m. But the biggest range, the biggest movement, the biggest movement slash delivery in the second daily half slash morning cycle, and that's important. Then on Friday we have that range, the reversal candlestick, and price made also the low of the day and high of the day on the second daily half, so on the morning cycle, where price traded lower into this high, which was the Wednesday high, acting as a immediate rebalance inside of the inversion fair value gap, and price expanded on the upside. So that's why this next week I'm interested in participating on the first weekly half, so from Sunday slash Monday first cycle, which is the night cycle, which starts at Sunday 5 p.m., going into Wednesday 5 a.m. and no more. That's my idea. So I'll be ignoring all of the rest from Wednesday uh, second daily half, which is the morning cycle, into the end of the week. So I'm doing almost a recap with a range idea, with a next weekly range forecast. So you can see now the candlesticks on the tower chart. Give me a second because I have to blow my nose. So this is not what I want to see. 1 second. So now going to the 8-hour chart. I don't think it's needed, but we can see that we had the half of the week made on the Monday second half, so London session, and we also made the low of the week on the London session on Wednesday. So that's an important note. I have the week made on Monday first 12 hours and second 8 hours London session. Low of the week made on Wednesday first 12 hours and second 8 hours London session as well. So that's an important note. We can see that price weekly open as well as new moon open. So I can be completely wrong on this, and I'm just still studying. And it's not like something that you want to ideally use, because it's not that it doesn't work, but it is a lot of study. out of understanding and experience. But then, as you can see, Tuesday also making this high of the day, expanding. Same thing here, low of the day. Only on Thursday, only in Thursday did price made the low of the day in the made the first daily reversal on the first 12 hours day. It's important to mention that the second 8-hour candlestick 1 to 9 isn't the session. It's only the first half of the second 8-hour candlestick, which is from 1 to 4, 5, which counts as London session. In Tuesday, price made the high of the week on the second 8-hour candlestick, but on the 4th slash second 4-hour candlestick. Second half of the second 8-hour candlestick on the New York Kill Zone. That's an important thing to note. So weekly open, price set above this high into key level that I noticed and I noted right here. This was the key level, which was this 12-hour order block. So after that, price played to it, made the high of the day, trading above a previous week high. So you can notice that this week one was previous week high was 32. Also, we can see the bodies respecting this CB, as well as price trading above the previous week high, trading also above this 5 p.m. 8-hour high. So this Asia range high into a key level. After the week made, expansion lower, closing and engulfing this 5 p.m. 8-hour candlestick. It's then followed by the Tuesday last 8-hour candlestick and Monday 8-hour candlestick, and then followed again by these next candlesticks. And we can see that by the openings and close, price is respecting this as a inversion of the so it started as support, now it inverts as resistance the weekly open. This is then followed by price on CPI expanding higher, creating not on CPI, this was before CPI. I can show you just a quick glance. So CPI was at 830, this was before. Back to the 8-hour chart. So price expanded higher, and for once again, what can I see on the 8-hour chart on GU is that the Monday high was taken on Tuesday, whereas on EU was a failure swing. So it's not a it's like not 100% accurate SMT, but it's very damn accurate how SMT can help you understanding if a high is going to be made. It needs also a lot of bias and that's not understanding of bias, but where is price likely to draw to, and in the first half price was likely to draw into this drawn liquidity, but now on second half after this Wednesday low was made, price is now more likely to draw higher, because I believe that is the low of the month, this is also the low of the week, and price is now going to go into these tops. That's my idea on order flow and liquidity. So that's basically it. So Tuesday then expands lower with a big range bulky candlestick into a drawn liquidity into a key level. So everyone now wants to short. Everyone now below this range low, below this drawn liquidity wants to short. You know, wanting short, and we can see price creating this range. Range low broken, range low reversed slash turtle soup, range high broken, retested as support, you never want to short after a range low was turtle souped, especially believing that this is a very high probability because of SMT, low of the month. So once again, SMT right here, where we had a range created below this week 1 range. And below it, everyone was trying to short this. Everyone is trying to short this low. Everyone and the mama right here on the trying to short, believing this as a breakout, but we had range low reversed slash turtle soup, range high broken. After a range low being reversed, week 1 range low, week 2 inside of week 2, so Wednesday 9, in case Tuesday 9 8-hour candlestick range low, turtle soup, range high broken. You never want to short after a range low is turtle soup and reversed. This followed by this range high being broken, and on London session I made the trade here and I got stop out because I tried to short. So I can see that it is 9 a.m. This 9 a.m. This 5 p.m. in this case, Asian range high. I tried to short this Asian range high into this Asian range low, so then price will get reversed on the upside. I was trying to counter trade. I said on the trade on Notion that I'm trying to counter trade, send price lower to then reverse on the opposite direction. But I didn't acknowledge that after a range low being souped, you never want to short a range high. There's or a buy side pool or a premium array or a fair value gap order block. You never want to short because yes, it can counter trade, but it can also go against you as a running down equity because every premium week is going to be a buy side resting, buy side resting, buy side resting, buy side resting, buy side resting. So on the 4-hour short before going to the 1 hour, we can see that now actually the third 4-hour candlestick is London session. Now this was the fourth, 1, 2, 3, 4th, so it was the London session. Same thing here, London session with a big week. So notice how everything was fractal from a big candlestick going into this range low slash week 1 low, from a big London candlestick going into these Tuesday lows. So big week, big not big week, big candlestick, big bulky candlestick into a sell side pull, big week, big bulky candlestick going into a sell side pull, where my aim is now for higher prices. This is immediately reversed, coupled, so after the soup we have a failure swing, so pattern traders get scared and they get out. So everyone that actually bought this low is now scared and they, okay, this is going to my stop, let me just put break even, and they got stop out, or let me just put close because it's a fail, it's now going to trade lower because of the breakout, right? While everyone is getting scared and opening shorts. So buyers are not in the market, are very scared, so they have a very small position or they're completely out. Everyone shorting is full margin, so everyone that comes to see lower prices is full margin on this, wanting lower prices, and the market and wanting the pattern to go lower, whereas the market makers are full margin this low and buy here. So this is immediately used as a reversal candlestick, as an order block slash proportion block slash breaker block, whatever. So you are buying inside of a breaker block slash order block. Price immediately trades higher. Range high gets inversed with this fair value gap. This drop lower creating this swing low, and then immediately trades higher on Thursday, which is then followed by this Friday candlestick where New York low made the low of the day and then reversed on the upside, making this high of the day. Because price traded above this high, now I can see lower prices into this order block and then the continuation of higher prices on the upside. Or price can immediately just trade higher straight from here. On the 3-hour chart is a very good chart because the 3-hour chart is like how a clock works. And a clock has 4 watches. So me make a clock right here. Imagine that is a normal clock, 12, 3, 6, 9, 12, 3, 6, 9, right? So if we divide the pizza, we can either divide it in half. So that's how I determine, and this will make 6 hours. So 6, 6, because and watch an entire clock is 12. So 12 to 12, 12 midnight to 12, what it's called? Midday to 10, 12 midnight. So it needs to make 2 halves, two entire spins around it. And if I divide those 2 spins are now enough, it's 6, 6, 6, 6, which makes 24. And if I divided now this one more time, I get 4. So are now 8, 4, 4, 4, 4, 1 half, 4, 4, 4, 4, second half. So night cycle, morning cycle, making watches. And those are made from, as we can see, so are 3-hour periods, because if you divide 12 by 4 equals 3, because 3x 4 equal 12. So if you count those, what those are, we can see that we have the 5 to 8, then 8 to 11 as a range, and then 2 to 5 as the London session, and then 8 till 11 as the New York session. That's how these candlesticks work. So I think that's nothing for me to tell more. I'm just going to see the charts right here, analyze by myself. You can see that London session from 2 to 5 was the eye of the day, and the eye of the day for Monday, which was the eye of the week for this week 2. And then same thing here, wait on the 2 hour, 3-hour candlestick. So between 2 to 5, price made the low of the day for Wednesday, which was also the low of the week, and then reversed on the upside. So I think that's it's all. I'm tired as fuck, but it is what it is. It needs to be made. Even though that I want to go to bed and fall asleep, job is not done. So you can see that after, this is important to notice because it is something that I get all wrong a lot of times, and it's focusing on this reversal. Notice how a low was made, followed by a retracement into a CV, making an intermittent high. This intermittent high sent price lower, so I can see right here a pattern, right? We can short this intermittent high with a stop loss into this sell side pull, because everyone is trying to buy this low, which is not time to buy this low, especially at 9 a.m. On Tuesday, where everyone after CPI, they are either trying to chase lower prices, or they are either trying to buy some random low. So there's a lot of orders both ways. We can see, and that's what created this range. Is a both of buy orders trying to buy non low, and a lot of sell orders trying to continue to see price lower. But it's when price creates this breakout that there are now way more sell orders. Everyone is not trying to sell, and that's when the market makers are going to buy, if I'm understanding correctly. And I'm also a little bit tired, but that's how I can explain it the best. Just give me 1 second. So we have a retracement making an intermediate high, which was the range I that I mentioned, and this is followed by price standing lower. A lot of buy orders, a lot of sell orders, because market is now not in consolidation, but in everyone is not one-sided. There's not a narrative created yet. And when you have this purge lower into this low below another low, that's when everyone switches. So those who are bullish are now bearish because their stop loss was taken. Those who are bearish are now even more bearish, and those were bullish or trying to buy and I was completely scared, or they buy and then they get these failure swings and then they close because prices now it was very slow when making this low. And while everyone, not everyone, but 99% of traders are trying to short this, so bulls that were taken out are now bears. Bears that are now in profit are even now more bears. Market makers are buying this, making this slow consolidation and failure swings to make everyone scared and everyone believe that lower prices are going to continue. And the marketplace reverses this entry point. So entry point to drawn liquidity, this entry point, this inception to this end is now undrawn liquidity. So from entry to drawn liquidity, now this is an entry to this drawn liquidity. That's how it works. And then this is as an accumulation, as a range high broken with a fair value gap, as an accumulation to price continue on the upside. So it's important to mention that this inception into this low, into this end of the inception, so dealing swing price inception slash start to swing price low, this swing price low was the low of the week. And that's a thing that I call about, this was a Judas swing, so this Judas swing guy, Judas swing inception to Judas swing low, not Judas swing low, but the manipulation, but it's better spelled by this way, so I'm sorry, I'm just getting lost in words. This manipulation I will call, not manipulation start to manipulation end, so from here to here, let me put in another color, so orange, from here to here, so start and end. The end was the beginning of this leg. So what I mean by that, in the Judas swing, right? So we have in the candlestick, and this is the last thing we cover. In a candlestick, so just so where this is the Judas swing, right? On the Judas swing, the Judas swing inception, which was this low, slash starting point, to the Judas swing high, or the Judas swing end. The Judas swing end is going to be a key point where price is going to reverse and attack the Judas swing low. So in this case, the Judas swing slash manipulation start. So you could imagine it could be this an entry right here. Imagine it is an entry to this key level right here, which then creates the manipulation end. Then manipulation end is going to act as a reversal POI because that's what we want to see. When the manipulation ends, we want to see a reversal in the opposite direction. And the manipulation starts, which started this expansion up, this manipulation up, is now going to be used as a drawn liquidity. So after everything, this manipulation starting point, inception, is now viewed as a drawn liquidity, and we want to see this manipulation start slash inception being traded to and through. So being traded to and through, not being traded to then reverse again, because that's going to create a ranging candlestick, but being traded to and then completely lower, because if it goes here, what can happen is that go back higher, then go back lower and create a range candlestick. So we want to see this manipulation starting point being traded to and violated lower to then continue lower as a retracement, expansion slash continuation. So that's everything for this week, and yeah, that's basically all. And yeah, I'm going to end the recording. I'm a little bit tired, so my words, my mouth is not working correctly, but job has to be done, and that's it.